Debit call spread tutorial with Market Chameleon. This is what we're doing today. What do you need to know about a debit call spread? First of all, the number one thing that you need to know is that your outlook is a bullish market. You are basically doing a debit spread. You're not collecting income, you are paying money up front, and your goal is to do this when a bullish market, when you think the stock will go up, but you don't just want to buy call. You are basically buying a call debit spread. So I'm gonna tell you how it works in a second. But first, let's read the disclaimer and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And my name is Ziv, also known as Finance After 40. So let's get started. So what is a debit spread and why should you use it? So think about it. Let's say the stock, for example, is worth $100, okay? And you can read all this as well. While I talk, feel free to read. But let's assume the stock is at $100 and you have a bullish outlook. Remember this, bullish market right here, remember. So you have a bullish outlook, the stock is at 100. You are buying a call spread. Out of the money, call spread. So you buy the 105 calls, okay? But you don't just want to buy 105 calls because this could be expensive. So you're taking a little less risk by selling simultaneously the 110 calls, for example. So for example, instead of just buying 105 calls, you are buying the 105, you're selling the 110 calls simultaneously, and your max profit is if the stock goes over 110.01. Now the negative for a debit call spread is that if the stock goes to, I don't know, 110, 120 for example, your max profit is what you collect as income minus the debit between the 105 110. It doesn't matter to you. Your max profit is at 110.01. Doesn't matter if the stock is 115, 120, 150. Your max profit is capped. But this, what you get paid for this, is paying less compared to just buying the 105 calls that could be expensive. So you do buy the 105 calls, but simultaneously you sell the 110 calls, for example, to reduce the amount of money that you pay. So this is for a bullish play. A lot of people played the Tesla far out of the money debit spread about 3 years ago, and they made a lot of money. Something to consider. So we're gonna use the filters. You can play with all those filters in here, but I like to go to Market Chameleon preset filters. Now in the last video we went over the first two. Went over bullish crossover plus theoretical edge, and went over best by theoretical edge and 70% win rate. This is one of my favorite. That means that you are paying less. Theoretical edge means that the debit spread costs less than what you should have paid based on history, and you also have at least 70% win rate. So let's continue. Now we got recently viewed. It's basically, I mean, it's every person has recently viewed stocks. So let's keep going and see what we got. Best by return if flat plus 10%. This is a good one. That means that if the stock, let's say, it doesn't move anywhere, you're still making money, and the 10% edge means that you are paying less for the debit. So this is actually a good one. Again, let's repeat. That means best if by return if flat. So the stock doesn't go anywhere, you make money, and the debit that you paid cost less than what it should have cost based on history. So let's click and see what we got in here. So they already changed the filters. Let's see, expiration in the next 30 days. That's nice. The spread is maximum $500. That is fine. Return if the stock is flat and positive. Okay. Ex-dividend is after the expiration. Theoretical edge, we got 10%. Again, that means that you are paying for cheap debit spread based on history, and show best return if the stock is flat by symbol, which is good. So now let's filter this. We got 4 pages. And I want to go in here. Percentage return if stock is flat. We can filter by that. Let's click twice. Okay. Wait for it to change. Okay, let's click twice. Usually I like to either filter by theoretical edge. That means, as I said, the higher the number, the more edge you get, meaning the cheaper the debit call spread compared to history, or go by win rate. But let's see by here, percentage return if stock is flat. Let me click again because I clicked here for a second. So here we go, bear with me. There we go. So now, yes, this is 115%, 96, but you gotta take it all with a grain of salt. I'm looking for stocks that I know. So UVXI, I think it's like VIX ETF or something. Ultra short VIX ETF, I don't know. I'm not touching this or this. Mara is the Bitcoin mining one. Okay. If you are bullish on this, maybe something to consider. MU Micron, okay, 99 billion market cap. The chip, yeah, I think they're doing chips or something. $90 price. Let's just see what we got. $90 price tag, almost 100 billion market cap. So you see here the debit is $230. This is the debit that you're paying, okay, but based on history you should have paid $260. So you got a 13.4% edge, 68.8% win rate, and it tells you already the trade itself. You buy the 86 call and you sell the 90 calls for September 27, which is like 3 weeks from now. Okay, your max gain is 170 and your max loss is 230 if the stock goes below that, but you're already at max profit. And this is what I like. You see here, percentage return if the stock is flat, 73.9%. So if the stock MU doesn't go anywhere, and remember, when we're doing a debit call spread, we have a bullish outlook, bullish market outlook. You're bullish on the stock, you're bullish on the market as a whole, you're bullish on the sector. The price is 90.2. You sell the 86, which is deep in the money call, but you don't sell. You buy that, and this is expensive because it's already in the money. But to cover this call deep in the money, you sell also not deep in the money, but you sell at the money call as well. And as long as the stock stays above 90, if it doesn't go anywhere, by expiration, you are collecting, your max profit is $170. So let's say the stock doesn't go anywhere or goes up, your max profit is 170. Your max loss, which is $230 compared to $260, is if the stock goes below 86. Now there's no earnings, there's no nothing, otherwise it would say here there is earnings, my bad, but the earnings is on 25. I mean, you can close the trade like 1 day before earnings. I assume this price will be in a different price. This could be, I don't know, it's up to you, but the price will change in the next 3 weeks. If this goes from 90 to, I don't know, 92 or something, that price will probably be different and you can close the trade. Up to you. Let's do a different one. Kruger, I know they have earnings soon. Price 53, okay, and you see here, the debit is 59 compared to 67, 14% edge, 68% win rate. Interesting, but this is for a small account. If you just want to play around with the debit call spread, you have earnings next week, so this is for September 13, but the trade itself, you buy the 52 calls, you sell the 53 calls, you're already in the money, and if Kruger doesn't go anywhere, you got 69% return if the stock is flat, which is good. Your max gain $41, so you're gaining 40, you're risking 60, and basically you're bullish on Kruger that it will either go up or stay above 53 by expiration. You can filter and see all the other stuff in here. we got ourselves the Russell IWM. Let's see, for example, this one, price 212, and the debit is 120 compared to 133. Okay, this is your edge, 10%, 64% win rate. And you buy the 210 call, you sell the 212 calls for tomorrow. Interesting, for September 6th. And your max gain is 80 bucks while risking 120. This is actually interesting. Very good ratio, not a financial advice. For one day, if the Russell doesn't go anywhere, you made 66.7% return on your money. That's actually, I'm gonna take a look at this trade after this video. This is pretty interesting. And you just want the stock to stay above 212, which is where it is right now. So this is also for small account. You're risking 120 to make 80. If the Russell stays above 212, great, you made 80 bucks. If the Russell goes down below 210, okay, you lost 120. This is the risk reward. So, and you can go on tons of other opportunities. Let's see what else they have here. This is also interesting. Best by win rate plus 10% edge. So this is a good one. This is like the solid stuff. Win rate plus 10% edge. Okay, let's see what we got. Just filtering. And we got 18 pages right here. So let's see here if we filter by win rate. I like to filter by win rate, just to see if there's anything new or special. And you can log in every day to Market Chameleon if you're not a member, 7 days trial. Just see what we got. But you see all those 99% win rate. Interesting. Let's see something that I know. CVS, interesting. Do they have any earnings? No earnings for December 27. Let's see what we got here. Let's see. I'm looking for something combination. So this is CVS, like 5 trade opportunities. Now the price is 57.69. Interesting. So the highest edge is 18%, 95% win rate. So let's look at this. Let's take a look. 57.69 is the price. The debit that you're paying is $160, but you should have paid $190. So that's a 30% discount, which is the 18.4% edge, 95% win rate. And look at this trade. You buy deep in the money $54 calls, but you also sell in the money the 56 call. So basically you are risking 160, but you're making 40 bucks. Interesting. And as long as if the stock stays flat, you still made 24% yield in like 3 weeks, which is good. You got a downside cushion of 3.6%. You also can filter by downside cushion. It's up to you. And tons of other opportunities. Look at the MU that we just saw. You got like, I don't know, 10 options in here. Avego have earnings today. But all those 90+% filter, if you find a stock with a high win rate and a high edge for me is like, I don't know, at least 15%, something like that. 15-20% is a good ratio. 90% plus win rate. Solid stuff. Of course, everything can go wrong, but solid stuff. And you need to be bullish. You need to be bullish. If you like to do debit call spread, I like to do put credit spread. It's a personal preference, but nonetheless, another trading strategy to add to your arsenal. Instead of just randomly going on Robinhood, go to Market Chameleon, look at the filters, play around with them, find something that you like from all of this. I want to try seasonality bullish play maybe on the next video, because this is also a good one. And tell me what trade ideas you got. If this was valuable, 7 days trial, link below. I'll see you next time.